Why has consumer confidence been on the rise? Should investors be feeling bullish about the holiday shopping season that is upon us, Guy?
Hello, Mel.
Hello, Guy.
It's an intimate group here tonight.
It's yes.
People should be. I mean, I wish I was more optimistic, and people clearly are. And if you were to look at the market or the retail landscape through the lens of American Express, all-time high today. MasterCard, Visa, all-time high today. Walmart, all-time high. Costco within a whisper, you'd be like, my God, things are going great. And it's true on one side of the equation. There's a flip side of that coin as well. Look at the dollar stores. Kohl's today making a multi-year, I think 4.5, 5-year low. So you talk about a bifurcated retail environment. You're seeing it right here. My concern is credit card debt now approaching $1.2 trillion. 23% rate is the average that people are paying, and delinquency rates are now at a 13-year high. That's the other side of the coin. But right now, people feel great about things.
Plus, you have the election behind you. And Trump, not to get political, Trump was favored on the economy 55 to 45%, or whatever the number was, thereabouts, by 10%. Walmart, Guy's point, 75% of the revenues are from higher income earners, probably trading down. I don't know if that's necessarily a good thing or bad thing. It is what it is. People feel as if they have some closure behind them. We had a lot of major events that were happening. Things seem to be simmering down now, which is a tailwind for confidence, in my opinion.
And we know the Fed is on a rate-cutting path, regardless of what mortgage rates are doing. There is hope to come still for the consumer.
Right. Although I think Steve's point is really important. I think people, the markets and people hate uncertainty.
Yes.
And so regardless of how what you wanted to happen, there is clarity there. I think that's good. I also think that there is, remember how skittish retail, the shoppers seem to be in that not the back to school quarter. Mm-hmm. I think that's behind us now. I think also the market has risen a lot. That makes people feel better, wealthier. And so a lot of things I think are setting up nicely, as well as I think that most retailers are positioned pretty well on an inventory standpoint. So I think they can get good margins. So I'm pretty comfortable with the retail setup right here.
Right. The thing is that the retailers that have been doing well are or can be considered expensive.
Mm-hmm.
And the ones that have been doing poorly because they cater to the demographic that you cite is having more difficulty, like the dollar stores, they are doing poorly. So do you accept this, the bifurcation of the economy, and translate that into what you buy for retail stocks?
I believe that's exactly the case.
Despite the valuations.
Yeah, at a certain point, valuation is going to, but, people have tried to knock holes in the Walmart valuation probably for the last $25 or $30, and that's obviously been unsuccessful. The flip side of that coin is, you're trying to make a cogent argument for Target on valuation. That hasn't worked out. Think about this quickly. Since 2021, when Target made its all-time high, that stock has been cut in half. At the same time, Walmart's doubled in price. Now, the valuations have gone in a similar way, but, to fight it on valuation has been a losing game. So I do think you trade it that way. At a certain point, the valuations of the dollar stores and Kohl's and Target even, throw that in the mix, are going to be too compelling to pass up. We're just not there yet.
If you believe that the consumer is on the path of doing better, that things are better for the consumer, then isn't it time for a Target? Because shouldn't those discretionary items do better? They can sell more pillows and lamps and whatever it is they sell that people don't want right now.
I think we're still in that marketplace where you started the question, the Guy, of buy the winners, right? So Walmart, expensive. But when you look at, Karen brought up inventories, Burlington, Ross Stores, TJ Maxx, all the companies that benefit off of poor inventory management, their stocks are straight up. So those are the names that people are going to for the bargains, along with buying Walmart.
They also are the places people want to go for to find that something special. So if you have a higher income, you go there and you can buy something that is or was a luxury good that is now marked down. And so there's perceived value there.
I guess there's the same as that, we talk about the wealthier customer going to Walmart, the wealthier customer going to TJX, and it used to be something you would hide, and now, it's sort of a badge of honor. So I'm long TJX. I like TJX, but I actually think Target is interesting here. And I just think that, the PE differential between Walmart, which I own, and they've done a fantastic job, is just too big here. Now, we know that Target has had some problems with inventory, actually, with the
most recent quarter.
In the most recent quarter, trying to get ahead of tariffs. But I think, I don't know, the valuation is really low. Could it go lower? Of course. But I think the bar is pretty low for them now.